Well, hello, Dallas Fort Worth. It is time for our November 2024 real estate market update. So before you go gobble down that turkey, make sure you're gobbling up this real estate news because whether you're buying, selling, investing, or you're a realtor, I hope that you find this information helpful to become the very best at what you do. I'm Callie Ritchie, the broker owner over at Ritchie Realty and your real estate coach. So let's dive into what has been happening through October as we kind of start to plan and wrap up the end of this year with real estate in the metroplex. All right, so let's get to our screen, our handy dandy screen here. We're going to pull up and look at what's happening with sales prices, what's happening with days on market, what's happening. Like, oh my gosh, I know you. Some people are saying, "Oh my God, this house down the road from me has been sitting on the market forever." It seems like. What is going on? Well, we're going to talk about that. All right. And as we do, I want to just draw your attention to this. We're going to take a look at the four major counties here in the Metroplex, Dallas, Fort Worth, Collin, and Denton counties. All right. Now, sales prices year to date. Guess what? They're on the rise. Days on market. Well, they've kind of stabilized. Months of inventory on the rise. Active listings on the rise. Like everything seems to be on the rise, including interest rates, right? I mean, I think I talked to somebody yesterday and we're at like 6.8 something on a conventional loan. So there you go. That's where we are. We're probably going to come back down. Now, there's some hope that maybe rates are going to come down this year. We'll see. We're going to talk about that too. All right, median sales prices. Nonetheless, we started off the year at 389 in January, median sales price. Today we're at 404. That's about a 3.9% appreciation year to date. Congratulations. Now, I know some of y'all are going, oh my gosh, well, how can that be? Because I'm seeing prices come down right now. Yes, you are seeing prices come down because this has been an interesting year. Now, look at this graph for year to date. We saw prices rise. We hit our peak here in April, May, and June came down on maybe a little bit. Actually, I think it was the same in June. And then they started to come down, and we have been coming down. October, we did push up a little bit from September and August, but nonetheless, we saw our peak way sooner than when we normally see our peak. We normally see our peak here in June and July, not in April and May. Okay, so it has been a very volatile, different year, and that's why you're seeing the prices come down. What do I project them to do? Well, we're going to talk about that here in a minute. But let's keep going. Just talk about our stats of where we are today. Today, our days on market is pretty much balanced with where we were in June and January. Okay, our month supply of inventory now has increased. So, why is that happening and what does that mean? Let's talk a little bit about that. Our active listings, as you can see right here, 15,000 we started with in January. Now we've increased that to almost 10,000, a 65% increase to almost 25,000 active listings. So we're having more listings hit the market and less sales. We don't have quite the number of sales, which is now increasing that days on market. Well, the days on market kind of been fluctuating a little bit in the 60s to 70s. And then our month is definitely pushing our month supply of inventory from 3.7 in January to 4.3. What does that mean? That means if we didn't list another home on the market, it would take us about 4.3 months to absorb all the homes currently on the market. Is this a buyer's market, seller's market? Well, we're more of a stable market right now. Putting it to perspective, when we were in the heat of COVID, when crazy market times, right? We had about 2 weeks supply of inventory. Before COVID, we were always hovering around 2.5 to 3 month supply of inventory. Now we have doubled that. Okay. And my speculation is that as we're entering into December and January, which are typically the lowest pricing time, the low season, right? And we're going to go over that here in a minute. Could potentially see that increase to 5 month supply of inventory pushing into a buyer's market. The one thing that could change that, okay? Well, there's several things that can change that, but one thing that certainly will affect it is interest rates. And if they come down, we'll probably see those prices start to push back up, or even more than what they are right now, because they're already pushing up, right? All right, this last thing I want to show you here, especially if you are, well, if you're a seller, just know, and you weren't able to sell your house, we call that an expired or a canceled listing. I pulled up the stats just for the expired listings. We started off in January at about 6,500. Now we're almost at 10,000. So we definitely have seen an increase in our expired listings, about 50% increase. That's pretty significant. So sellers, if this is one of you, you're not alone. It has been a very hard market to sell in. But I do want to encourage you that homes still sell. So if you're a realtor, go connect with these sellers and help them. They need your help. And we're going to talk about that in some courses that we're going to be providing on how to help these sellers. So make sure if you're a realtor, you're staying in tune with what we're doing. Reach out to me on the bat line. Let's talk. All right. Year over year. So I want to talk about year over year stats as opposed to just year to date, because this can significantly change and why. I do want to say if you are, we look at seasonal pricing as I was telling you. The prime times to really purchase a home, historically, the low pricing is in December and January. As you can see right here, here it is in January. This is going back 5 years ago. We see the low end in January, the high end in July. In January again, we're seeing it come down right here in January, and then we see it peak back up. And then again in Jan, I mean, it's always, as you can see, and guys, this should give you, looking at the perspective over 5 years, prices are always going to be inclining. So if you're thinking about a market crash, don't let that worry you. That's another topic in its own. I don't think we're going to see that. Nonetheless, we are seeing these low peaks in January. That's what I want you to see, and the high pricing in the July, June, July season. So right now is a perfect time to buy. A perfect time. Not only historically are prices going to be cheaper in December and January, but if we look at what's been happening with prices coming down even more right now because of the market, it's a perfect time to buy. You're buying the price, not the interest rate. Always remember that. Go back to some of my other videos and hear me talk a little bit more about that and why I'm an advocate. All right, I want to talk about year over year stats because, like I said, and we just showed how volatile it is. This year's been a little bit different than historical. So let's take a look at year over year. And when we do, the stats change a bit. So what we do see, though, is that prices are still up year over year by 1.6%. Nonetheless, they still are up. That could change next month, so make sure you're staying tuned for next month's video. Days on market have been on the rise from year over year, 56 to 65. Our month supply of inventory, again, has been on the rise. Our active listings, again, on the rise. Expired listings. Do you see what I'm saying, guys? Do you want to just say it for me? It's on the rise. So there you go. Year over year, things have been on the rise, but our sales price has also been on the rise as well. All right, now let's talk a little bit about our forecast for what's happening. And actually, you know what? Before I go into the forecast, I want to share with you one other thing. If you are thinking about buying, because I get a lot of buyers that say, well, what should I offer? Can I offer them $50,000 below? Absolutely, you can. But I want to show you what just the real stats on where you can expect to land, if I can find my correct screen here, where you can expect to land on your offer. And let's see here. Here we go, right here. All right, so this is straight from the MLS. And as you can see, what we're looking at here is our list price right here versus our median sales price. And this is for this year, okay? Same counties. So as you can see, we're about 10,000 below what they're closing at. What homes are closing at are about $10,000 to $20,000 on average below what they're listed at. So if you're wanting to know what should I offer, what can I expect, look at this. So you're at in November, the average closing price is about 10,000 less than what the list price is. Again, the same thing for October. We're 20,000 in September. Again, about 8,000 here, 10,000 here, 15,000 here. So you get what I'm saying. If you're thinking about making an offer, you can expect to be somewhere in that range. Let's say it's a little over 3% on average, 4% of what the list price is. So, all right, I'm going to stop that share. I just thought that was interesting for those of you that are thinking about making offers. All right, let's go back to our, I'm sorry, guys. Let's see. Let me go back to my share. And if I can figure out how to operate, right, my computer. Okay, here, there, and here. All right, I want to talk about what's happening next year. What can we expect going forward? Here we go, home forecast. for those of you that think the market's going to crash or prices are going to continue to go down, no one, none of these other people believe with you. And we've got Freddie Mac, Wells Fargo, we got Fannie Mae. I mean, all of the forecasters here in 2025 are saying home prices are going to be on the rise. By how much? A very moderate increase. As you can see here, 0.3 to all the way up to 4.4% rise in prices is what is forecasted in 2025, on average 2.5. This is moderate. This is a healthy, moderate increase. Nonetheless, it is still less than what we have seen in the past. During the COVID years, we were like 20-30% increasing, appreciation in one year, which is way too much. Okay. Before COVID, from the years probably about 2013 to 2020, we were always doing somewhere between 8 to maybe 15%, which is still kind of on a high end as a really good appreciation for all those years. But a healthy appreciation would be about 3 to 6% appreciation. So we're really kind of just at a very moderate appreciation. Now, what does this mean? Again, if you're thinking about buying and you're thinking that the prices are going to continue to come down, they could over the next month or two, but they're going to really not come down all that significantly. And if rates do come down, it's just going to push the prices up. So go ahead and get in the market now. If you're thinking about selling and you're thinking, I'm going to wait until till prices increase, because rates are going to come down, everybody's going to get off the fence and prices are going to go up. Yes, that very well could happen. But what we're forecasting is not a very significant increase. So if you're needing to sell your home, don't hold out for the market to, have this big bang, because some people were holding out for this summer and it didn't happen. It happened in April and May. It's a volatile market. No one should be sitting on the fence right now, is all I've got to say with that. Now, what about homes that are selling? I know we've seen a lot of homes sitting on the market. Their homes are buyers are not buying right now. They haven't come off the fence yet. So what has happened with expectations for 2025 is that we're going to actually see an increase in sales. So right now we're hovering at about 4.6 million in sales. We're expecting a 13% increase in sales for 2025. So this is fantastic news. This is very healthy. This is what we want to see. We want to see people get into a home and start the journey of home ownership. And if you're a realtor, guess what this means for you? You have more opportunities out there to help more people buying, selling, and investing as we approach 2025. Now, I hope that you guys have found this information helpful for you, whether you're getting into the market for the first time or you're a repeat offender. Hopefully you can take this and put this on your journey with you. Thanks for tuning in. Go gobble down that turkey, and we will see you back again next month as we start to close out 2024.